Hey everyone, so today I wanted to just quickly make a video more for people around my age or for, well, parents that have children that they want to get investing. Maybe their kids are interested and would like a bit of an idea of what it involves and why they should be doing it. So obviously this whole video isn't going to be me talking about why I recommend it. I'm also going to be kind of talking about what you need to do beforehand and how I think you should approach investing in general. So without any more being said, here is why I think you should personally be starting investing now and why I would encourage you to. Hopefully your parents are encouraging you to if you're interested, and if they are, I think take that opportunity and really give it a shot. So now, why should you invest as a teenager? I'm 16 years old, I'm not sure how old you are, you could be 14, 15, you could be even 18 by now. So now, better late than never, and to be honest, if you are still a teenager in general, even under 20s, you're getting in at exactly the right time. You're early, and I think that that is great. You'll see massive rewards. So now there are a lot of different investing styles, different investing methods, different ways people want to approach building their portfolio and trading. And why I personally think that as a teenager it's the best time to start is because your options are very, very open. You can do almost any investing style you please, as there are so many advantages you have. Now I'm being a little bit broad with saying that, so I want to explain what I'm talking about here. So the first style, which a lot of people would know about and a lot of people I'd say would be inclined to do and would be told to do. I'm often told this is the way I should approach my investing because, well, it's the only way that is going to be pretty much fail-proof. And this is by long-term holding. Now, this can be done, in my opinion, easiest with something such as an ETF. An ETF is an exchange-traded fund. It often holds multiple different equities. Now, a great example of this is the Vanguard Australian Shares Index ETF. And this is one that I'm personally invested in and I think is very, very promising. I think that it's great because it is the top 300 Australian shares. Now, this pretty much means as long as there's no sort of collapse in the market like we had in March, you will be okay. But even if we do face a bit of a collapse, in my opinion, the market always will recover, and if it doesn't, there's more to be worrying about than your portfolio. It would mean a lot of bad news for the economy and the country in general. So what does this mean for you? Well, you're taking very little risks, but you're still getting a decent reward. Typically people say no risk, no reward, and although that can be very true, especially if you want to be aggressive, you can't be laid back going with safe bets all the time. Sometimes you need to take risks. However, going with an ETF is not at all a stupid decision, as with time, this really can increase a lot. So if you haven't taken a look at it, I personally still always sit down and I put different figures into a compound interest calculator. They're very great to get a good understanding of compound interest, to get an understanding of how much money you could potentially have if you are saving and putting away investing. So I've just got my laptop here, and over the last 10 years, the Vanguard Australian Shares Index ETF has gotten an average of 7.64% annually. So 7.64% annually for the last 10 years is fairly decent. That way you know that in the long run it's also fairly safe. It's a solid percentage of gain every year. So everything affects the stock market. It can be politics and everything can always change the way the market reacts. So you can't always base it solidly off the past returns. However, let's just say hypothetically, you're getting 7.64% per year. Now, like I said, you can get this very easily just by investing in this Vanguard ETF. So let's just say initially in your investments you had $1,000, and let's say every week you're putting in $100 into the market. Now, in my opinion, that is realistic. I think if you have a job, you can be earning $150 a week, if not more. And I think that with spendings from being a teenager, if you're just going out one day a week, you shouldn't be spending too much. Hopefully you'll be able to put $100 into a market if you have a job. So if you're putting $100 weekly into the market, and that was compounding monthly for 10 years at a 7.64% return, in 10 years you would have $79,846. Now that's just if you're putting $100 a week. Hopefully once you're an adult and you're earning more money, hopefully you can be putting more into the stock market. But that's just hypothetically to show you the effects of compound interest. So obviously with that being said, in the 10 years, that's not all compound interest. There was still that $1,000 initial deposit, and in regular deposits over all that time, you would put $52,000 invested. But still, in total interest, that's still $26,846, which is quite a bit of money. And obviously those are figures that I believe a teenager can be putting into the market. I personally believe if you're older and you're making more money, maybe you could be putting much more into the market. If instead you're putting $200 every week into the market somehow, I mean, it's not easy to earn $200 a week at our age and be saving it, but if you were putting $200 in, instead that would be $157,550 that you would have in 10 years. And from all of that in interest, that would be $52,550. And that there is enough just in interest to be buying you a Mustang in 10 years. Now, whether you buy a Mustang or you buy any sort of car is up to you, obviously, but I'm just showing you how much you could have simply by just thinking about it now. Now, there's always time for compound interest. However, it does have compounding, meaning the earlier you get in and the longer it's compounding, the better, because it's like a snowball effect. So in my opinion, that is one of the safer, less risky ways to create massive wealth from a young age. Obviously, with that being said, we're not going to see great effects for the first few months or years. We're really not going to see a lot of reward. However, it's still going to be quite encouraging knowing that in 10 years, well, you will have a lot more money. And for more years to come, hopefully you don't stop there. You can be making stacks. But if that's not your cup of tea, maybe you don't want to wait forever until you have great amounts of money. And well, that's up to you. At our age, we can really decide. You know, some people even like to do a little bit of both. You like to be aggressive, making as much money as you can now, but you also like to have your long-term investments. That's a very intelligent way to, play the game. So you can also, like I was saying, create wealth rather quickly. Now, this does have a lot more risk involved and often shouldn't be the only way you're investing, in my opinion, but, well, it's up to everyone, each to their own. And this can be done with a lot of different methods. You could be trading, swing trading, you could try day trading. I personally don't, but you really could try whatever you would like. However, a nice way I think that you can get into making good amounts of wealth within a year or so is with penny stocks. Now, penny stocks, what I think is great about them is you have the ability to hopefully see great returns. You can see sometimes returns of over 100% in a year. And when that happens, you could sell off your initial investment and just keep the other profits that you've made from it in there. And if you do that, you've pretty much got a fail-proof investment. An investment that has no risk because, well, you've already taken out the money you've put on the line. Now, obviously, that's being very hopeful. You don't always make great returns like that. Sometimes you can lose a lot of money. However, you can take these sort of risks at our age. We don't have bills to pay. We don't have any worries. We don't have to pay rent, most likely. And, well, I think it's a way that we can make wealth. We can get very encouraged. This does require more time, in my opinion, than just putting money into an ETF. Quite obviously, you need to look into different companies. But penny stocks are a great way to see great returns. Now, penny stocks can be traded in the short or the long term. It really depends on how you want to go about it. But like I was saying, a lot of people like to take out their initial investment and just leave in the profits once they've gotten some. And that is by no means a bad way to play the game. It's very intelligent because then you can put that initial investment somewhere else and you can just rinse and repeat the same steps. Now, obviously, if you do get lucky, if you do your research properly into all these different companies, once you know what you're doing, I wouldn't recommend this while you're starting. But if you really are interested, you can watch a lot of videos on YouTube, you can read a lot of books and articles, and you can learn how to properly look into companies. So, like I said, you got both those options at our age. You can be aggressive and earning as much money as you can now, or you can be very conservative in the way you invest, just hoping to have a good amount of money in the future. So you get to pick and choose which way you want to go about it. You can be conservative and just think about the long run that you're going to have a lot of money in the future, or you can be aggressive just thinking how much money I can make now. Either way, in my opinion, if you're very calculated, you do your work properly, you can make a lot of money. If you really would like, you can be doing both. I think there is no harm in doing both those methods. You can be thinking in the long and the short term. So those are the reasons why I think now's the best time to start. You get to pick and choose what you want to do. You can take risks, or you have the time to see the great effects of compound interest early. So next, I want to talk about what you need to do first. Now, there might be some of you that don't want to hear this, but you need to get a job. When I say this, it doesn't need to necessarily be a job, but you need to have an income. This can be doing whatever you want. You can be mowing lawns, you can be selling arts and crafts, whatever method you want. You just need some sort of cash flow, in my opinion. No matter which method you take, you're always going to be wanting to put more money into the market, and unless you're having more money coming into your bank account, you're not going to be able to do that. So I'd strongly recommend just getting some form of income, and the best I could recommend is simply just getting a job. Now, I know a lot of us look at investing and think, well, that's the way, we don't need to work anymore, we can just make money from that, but I wouldn't be thinking of it like that. And personally, I think even once you start investing, you're not going to want to stop working. Personally, I started investing because I didn't know how else I could make more money than just a job. I wanted more money, and really I think in my mind there was a bit of that, well, maybe I can create money doing other things and I won't need to work, but now that I've got money in the stock market, I'm more encouraged to work because I just want to load more money into the market if I can. So I'd really recommend getting a job before you do anything, and hopefully having about $1,000 saved before you invest at all. Now I think this is possible, maybe not for everyone, maybe you're someone that likes to spend a lot, maybe you want to have the latest iPhones. You know, it's completely up to you whatever you do with your money, it's your money to use. However, if you're truly interested in investing, just put aside some money a week until you've accumulated enough to begin. Next, you need to find yourself some sort of brokerage to be buying through. And for this, I would recommend at our age, Bendigo Invest Direct. This is one I use. The commissions, which is what you need to pay every time you make a trade, is a little bit high. So it's probably not as good for the short term. But if you're long-term investing in ETFs, it's not a big deal. Now, why do I use Bendigo Invest Direct? Well, it's simply just because it allows you to be a miner while investing. This is a form of custodial account. It has both one of your guardians and your names on the account, but it's just something that I think is one of the easier methods of investing as a child. Otherwise, you may need to do it directly through one of your parents' brokerage accounts or something like that. But if you want to start your own account now, I would recommend a miner's account with Bendigo Invest Direct. Some other brokerages do actually allow this as well, so you can take a look, do your own research. I've created a video before, if you want to look on my channel and find it, about how you can invest as a teenager. So those are, in my opinion, the 2 steps you want to take firstly. Once you've done that, it's time you really make a bit of a game plan for yourself. This is where you need to decide, do you want to do this, like I was talking about before, conservatively in the long run, or do you want to do it aggressively in the short term? This honestly may change while you're investing. You could later decide, maybe this isn't for me, maybe I want to do this instead. That's up to you. Once again, you're a teenager, you've got a lot of time to decide. But you really do need to figure out what you want to do first, and then before you do anything, I'd strongly recommend doing paper trading. There are a lot of websites out there that you can do paper trading on, but also if you really want, just look at the market, try and find a few stocks that you're interested in, and pretend that you put $1,000 into a few of them. Then in a few months, take a look at how you've done, and if you were to sell them on that exact day, where would you be? Would you be making a profit or would you be making a loss? Once you've gotten a little bit confident with how your paper trading is going, your make-believe fantasy trading, then I would invest your money for real. Now, I know a lot of people would be very, very keen to invest, and I know that you probably don't want to wait months and months until you're investing, and I completely understand that. I wouldn't want to either. So personally, I'd say if you've got money and you're very keen to invest, put it in a solid ETF, like that Vanguard ETF I talked about before. The ticker code is VAS. Take a look at it. It is very safe. It's very, very rewarding as well. So if you really want to get started, put some money into that and then start looking into blue chip companies. Blue chip companies are just very well established companies like your Woolworths, your Domino's Pizza, all these very strong companies in Australia. You can be looking at US ones as well, it's up to you. But just look at these very solid, well-known, well-maintained, large companies. That's personally how I'd begin if you're very keen to invest, because they're safer options than going into penny stocks. And then over time, once you've invested for a little bit of time and you're feeling more confident, then maybe start looking into penny stocks. Now I need to keep in mind that you may not know what all this is. A penny stock is just a very, very small company with a small market cap. So I hope this all made sense. I'm sorry if it didn't. I was trying to keep in mind that maybe you don't know anything, maybe you do know some stuff. So I'm sorry if it didn't make sense, any of what I was saying. But if you really want to know any more, feel free to message me, feel free to comment. I'll try and reply and give you a hand. I'm more than happy to give my advice on how to begin. I don't want to be giving out stock tips because I'm a 16-year-old. I don't have any licensing. I can't give out any financial advice whatsoever. Nothing I say should be taken as financial advice, but I'm more than happy to give my advice and maybe a suggestion if you'd like some. And when I say that again, not on stock picks or anything, but I'm more than happy to give my advice on how to begin. So I hope you enjoyed this video. If you're a parent, feel free to show this to your child. I think it would be quite rewarding for them. Maybe they can get interested and inspired. I'd really love to be hearing if there were some teenagers that really got started because of me. You know, I've had a few very nice comments in the past, messages, people saying that they want to get their kids started investing, people saying they just showed this video to their 2 children. I've had a teacher telling me they showed their year 6 class one of my videos. And all of this I do find quite motivating and inspiring because I do want to be encouraging more people like me to begin investing. And if you're a teenager watching this, I'd really love to hear if you've started yourself. You know, it's a bit of a lonely interest to have at our age because, well, it's not something that everyone has at our age. But if this is one of your interests and you're still a teenager, really good on you. This isn't something everyone has, and I think it's something that our future selves are going to be really thanking ourselves for having an interest in. Thank you all so much for watching. If you like this video, feel free to give a thumbs up. It would really help me out with the YouTube algorithm. And feel free to comment anything you would like based on the video. Comment, have you started investing? Are you a teenager? Do you want to get your kids involved? And just let me know anything you want. I go through all my comments and I'll reply to all of them I can. Subscribe if you want to see more videos like this, and thank you all for watching the video until the end. It means the world to me. Thank you all, and I'll see you in the next video.